Are you thinking of investing in a European property market in 2023? Then you need to be careful because in this video I will show you the 5 worst European property markets that you should definitely avoid. Let's start with the biggest change affecting all the property markets, which is the interest rate hikes of 2023, following of course those of 2022. You can see in these slides all the forecasts until 2025. Of course, in this slide you see the predictions from different banks, and so we don't know for sure, and it is a prediction, so things can change, and the central banks can change their mind. But the consensus is that there'll be around the 3% mark 2023 for the ECB, then possibly rising to 4%, and then down again probably end of 2024 and then 2025. In the UK, we know that interest rates are a bit higher, so 2023 is already going to be probably 4%, and then a bit higher than that in 24, and then there's going to be a drop until the 2025-26. So why in the UK interest rates are higher? We know that in the UK inflation has been higher, so that's the main reason, I think. Now, let's start with the first one. First one is Portugal. Portugal, of course, has been a popular destination for the property investor in recent years, but in 2023 the market is definitely expected to slow down. According to the expert, the property prices are expected to decline by about 4% in 2023. And while the country offers a great lifestyle and good weather, it might be better to hold off investing until the market stabilizes. Let's see now what are the main reasons why that happens. So the first reason I think is the end of the golden visa this year. To know more about that, you can click on the link up there where I covered in details all these changes in a specific video. Another reason is the higher share of variable rate mortgages in the country, which leaves more exposed to rapid price adjustments. So just to give you an idea of the different property markets. So like countries like Portugal, Sweden, most people in those countries have variable mortgages. In most of the other European countries, you would have maybe a few years fixed, like 3-5 years fixed and then variable. In the US, I know it's different again because they prefer fixed rates. So Portugal is very exposed, of course, to that. Now, affordability. So we know that because of the golden visa and other tax incentives in Portugal, the property prices have skyrocketed, which are still kind of affordable for the foreigners, but not for the locals. So according to some experts, the accessibility of houses has surpassed level 1 in Portugal. That means that Portuguese families have to invest around 1.3 times their annual income to buy a house. This is an overheating factor, and they believe that this is unsustainable for the locals, considering, of course, the government definitely is gonna end, golden visa and other things that have over the years held property prices. Now, of course, higher interest rates, same thing. Higher interest rates definitely are bad for property prices. Now, let's go ahead with the United Kingdom. So, for the UK market, I encourage you to watch a couple of videos. I put the link up there about the 18-year cycle and another about the high inflation. So, very interesting videos. I definitely recommend you to watch. UK property prices are forecasted to drop about 4% in 2023, and the reason are slightly different. Of course, higher interest rates forced a significant part of the potential buyers out of the housing market. This is common to, of course, all of the 5. But the UK, unfortunately, will be likely the only economy in Europe with a negative GDP growth in 2023. And there's been a recovery in January 2023 because the GDP has increased of only 0.3%, but there was a fall of 0.5% in December 22. And the monthly GDP is now estimated to be 0.2% below the pre-coronavirus level, which is the February 2020, while other countries have already recovered, those levels. Last year, inflation was over 10%, one of the highest in Europe, and that's also a factor in the affecting the affordability, and in particular for first-time buyers. Then let's go ahead and cover Germany. Germany was in a different situation. Property prices have skyrocketed in the last few years. They were very cheap, I think, in beforehand, and then really because probably the low interest rates, a lot of people started investing in property, Germans and foreigners. So the German home prices are expected to sink nearly 6% in 2023, so one of the biggest drops. Let's dive into the details and explore why this is happening. So economic uncertainty. So Germany's economy has been struggling in the last year due to factors such as Brexit, trade tension, Ukraine war, high inflation, energy prices, and of course the COVID pandemic before. And this uncertainty has impacted the country's housing market, as potential buyers are hesitant to invest in uncertain times, considering the prices are already quite high. So yeah, we know that as I said before, the UK economy is going to be probably the worst in Europe, but Germany is not really that much better. Germany has been definitely the most affected by the Ukraine war, and the Germany has been basically cut off the Russian cheap oil and gas, and that's a big problem for their economy. Now, also to add to that, the tighter regulations. So German authorities have introduced tighter regulation on housing, which has impacted the market, of course. So, for example, and this is common to many countries, that we see the Netherlands, Ireland as well. So the country's rent cap law has limited the amount that landlords can charge for rent, making it less profitable to invest in rental properties. This also made it harder for landlords to maintain and improve their properties, which could also further the prices. So landlord selling. Again, I have a video about that. You can watch it up there. Then demographic changes. Germany population is aging, which has reduced demand for larger homes and increased demand for smaller, more affordable properties. Again, this is also adding additional pressure. And again, the highest interest rates. So we see that the potential buyers, because of the highest interest rates, higher interest rates, they if they have above average income, are now increasingly renting apartments rather than buying. Let's go ahead and talk about Spain. Spain is expected to continue struggling in 2023 with high unemployment rates and a weak economy that also impact the property market. So according to the research by Eurostat, the Spanish property market is expected to decline by 5% in 2023, making it one of the worst performing markets in Europe. There's certainly still oversupply from the construction boom of the early 2000s in certain areas. Other areas I think have recovered, but in general there's still a lot of properties. You can buy really properties for nothing almost with a credit card in certain areas of Spain. And I added a video on that if you're interested in buying a cheap property in Spain, or relocate to Spain, or retire early to Spain. Spain has also one of the oldest population in Europe, with a median age of around 45 years old, and this is in part to birth rate as well, increasing life expectancy. So not good news on that front. And of course, as usual, the highest interest rates common to all the others. And then to finish off, let's talk about the Netherlands. In the Netherlands, we have seen a really high housing boom in the last few years, but according to analysts from ABN AMRO Bank, property prices in the country are expected to fall by a further 10% over the next 2 years. So one of the worst countries. I think probably Sweden had a similar drop, but I think the Netherlands look worse. Now let's take a closer look at the reasons why that happens. So the market was definitely overheated, as I said, and is now moving from a seller's market to a buyer market. What I said for Germany is valid for the Netherlands as well. The government has introduced stricter regulation on the housing market, and of course that has impacted the prices. So is actually, of course, the increase has been done with the best of intentions, but is having the opposite effect because the private investors are backing off. Some landlords are faced with having to sell their buy-to-let properties because the new regulation to limit the maximum rent per month are definitely affecting the viability of the business with high interest rate, and there seems to be a point system where, and then you're very limited to the rent you can charge. There's also gonna be likely higher unemployment forecasted for 2023, and like all the rest, higher interest rates. So thanks for watching the video. Let me know your opinion in the comments below. Bye for now.